I refuse the concept of price predictions. Everybody tries to make predictions, right? Especially on the Bitcoin price. Everybody thinks maybe we're going to top out at 100K, maybe we're going to top out at 500,000, maybe a full million. Nobody has a real answer to this, but everybody throws out price predictions, and I rarely do this. I sometimes present models and say at what price those models could be peaking, but I never dare to make a prediction where in this cycle we are going to peak. And there are many reasons for this. The first reason is we don't know external factors, right? We don't know, for example, if the stock market is going to crash. If the stock market is suddenly going to completely collapse, not just trickle down, but completely collapse, and there will be a liquidity crunch across the board, and people have to sell every single asset, then everything will go down, right? Bitcoin will go down, gold will go down, everything will go down at the same time because everybody needs US dollars. So this already invalidates pretty much any prediction, right? If you can't predict what the external forces will do, how can you dare to predict what the Bitcoin price will do? But that's actually not the main reason why I don't believe in price predictions. The main reason is that I think it makes way more sense to evaluate based on models and based on what the current momentum, the current situation in the market is. We have to, of course, make a judgment call whether we should buy or sell Bitcoin. But we can do this on different metrics, not based on the price. We can look, for example, at what are the long-term holders doing. Are the people that tend to dollar cost average into Bitcoin, that tend to hold for a long time, are they suddenly selling? If the answer is yes, then they tended to be diamond hands in the past, and now suddenly they move their Bitcoin, and probably something has changed in the market. And I don't know if that happens at 80K, at 100K, at 500K. I don't know. I'm simply just going to look at those kind of metrics. But what's also problematic about price predictions is that it gives this feeling of a very binary outcome. It gives a very deterministic view on assets. And assets are not deterministic. They are very much driven by probabilities, right? When we have already dropped by 70 or 80% in Bitcoin, right, then the likelihood of dropping another 80% is relatively low, right? Simply just historically speaking. On the other hand, if we're hitting all-time high after all-time high, then the likelihood that some people will take profit is also relatively high.
Here's the problem with crypto YouTube. People promoting becoming degen or buying 100x coins. That's what gives clicks, but that's not what's going to bring you forward. I refuse to take money from centralized exchanges. I refuse to take money from crypto projects. I refuse to pump and dump a coin and filling up my pockets in the background. I don't do any of this. Instead, I share my knowledge in the form of tutorials in the premium membership. So that's content that won't do well on YouTube, but that builds up skill over time. You can also directly contact me over there. You can directly pick my brain. Feel free to check it out. TheBitcoinStrategy.com is the link.
So fundamentally, that means is you can never be certain where something is going. You should never think about a certain price target. You should be thinking of probabilities. Where is currently the highest likelihood for the price to go? And because of that, it also doesn't make sense to try to time the tops and the bottoms, right? Because we never have a 99% likelihood. We maybe have a 60, 70% likelihood. If we are lucky with our models, we might be saying there's maybe a 60% likelihood that we continue for the next week to go up. But that then in turn means that it also makes sense to have some other allocation besides Bitcoin, right? Because if the most probable thing will not come true, if actually the 40% materialize, right? This is in the end how probabilities work. If in the end Bitcoin price goes down instead of up, and we thought it goes up based on the statistics, then we have to be able to react accordingly. So you can't be too heavy in Bitcoin. You need to have something else, let's say stocks, and you need to be able to convert some of those stocks then into Bitcoin to buy the dip, because then once we have crashed, obviously the probabilities get a bit better, because the people that buy the bottom, that buy the crash, they tend to have longer time horizons, right? If you're currently buying into a rally, and you just simply recently started with Bitcoin, your time horizon might not yet be 5, 6, 7 years, right? When you now suddenly see Bitcoin retracing, you might get scared and sell again. But if you're currently in a crash and we move down a lot and you're buying in that crash, you're okay in case it crashes a bit more, right? You would even just buy more. You simply have long enough of a time horizon. And this is the difference. If the diamond hands are buying, then the likelihood of the price appreciating at some point is high. But if it's the paper hands that are buying, that are simply just buying in this current positive momentum, that tend to be short-term traders, and the likelihood of that at some point to turn around, of course, increases the longer the rally lasts and the more Bitcoin moves from the long-term holders to the short-term holders. Now, this concept is even more important for the altcoins, right? Because of those external influences. One of the main influences for altcoins is, of course, how crypto in general is doing, if crypto is currently expanding, if money is flowing into crypto. And when we suddenly see a crash, say, in the Bitcoin price, of course, the altcoins are also impacted by this. And so when somebody tells you, I believe altcoin A will go to $100, but they're not really sure where Bitcoin is going, how can they be sure where the altcoin is going? The only thing that might make sense to calculate is the potential upside, as in what's the current market cap, what could be a realistic market cap given similar kind of cryptocurrencies, and how much could this potentially go up if things play out well. So this way you can at least calculate the reward, right? You always have a risk to reward ratio, and if the reward isn't high enough, you go, let's say, in a very risky meme coin. That meme coin could easily go down by 60-70% if you don't time it right, but the upside potential is maybe just another 50% because it's already that large, and maybe it doesn't make much sense to buy the meme coin. So this is where targets could make some sense, but again, that's rather market cap targets, not necessarily price targets. And so the solution to all of this is simply just to keep always a balanced portfolio, to have all kinds of lowly correlated asset classes to one another, to be reactive to the price movements, not to predict the prices, and to never think about this too deterministically. We never can know for sure where something is going. We always just work with probabilities, and that's why we have to be somewhat diversified. The most we can do is to try to estimate those probabilities to the best of our abilities. If it's your first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.